Yes, Jeffrey Bezos' office, please. Thank you. Mr. Bezos, it's Jeremy. How are you? I'm doing well, thanks. Hey, got a big, huge favor to ask. Yeah, so basically, I know you're not CEO of Amazon anymore, but do you mind being on the conference call tomorrow? Because essentially, the market's being devastated right now, and you guys are the last straw to fall. If you guys aren't quite there, we're done. We're done. I'm cooked like a lobster, man. I'm red right now. You're not gonna do it? Come on, man. This is why I like Elon Musk better. Oh my goodness, guys, do we have a lot to get into. I just want to pack it full in one video. Hope you guys enjoyed that little skit as always. We got a lot to pack into today's video, guys. There's a lot of bad news in this market. I got a lot to share with you. I do have a little something good to share with you guys in this video. And I mean a little something, okay? And I never want to be, just full on bullish or full on bearish, at a particular time. So as with many times in the market, you got some good news, you got some bad news. We got to get into a lot of the bad news, okay? Because there's a lot to be not so excited about. Right now, this is freaky, okay? Right now, we have super cap stocks trading like they're penny stocks. Literally, look at Facebook. This is a perfect example. This stock's down 23% after hours. This is a $900 billion market cap, and it's trading like it's a flippin' flapjack and penny stock. That's a type of market we're in right now, and that's how volatile we are gotten. If Tattooed Chef was down 23% or up 23%, no one would blink an eye. I'd be like, all right, big deal. It's some $1 billion, market cap, some new company, whatever, okay? Facebook Meta down 23%. It's trading like it's a penny stock. It just blew through its 52-week low in after hours trading, guys. This is bad on bad on bad. And, I spoke about it earlier in a video. Their earnings were awful, okay? Basically, here's what we're looking at, okay? The growth expected for 22 for this company was 19%. And now they're expecting basically a midpoint of 7%. Midpoint of 7% when you're expecting 19%? I mean, I'm a Facebook shareholder. It's a smaller position of mine, but I am a shareholder nonetheless. And I expect this company to grow 15 and 20% a year. You come in with 7% and I'm like, what? This is why I can't even buy the dip in Facebook tomorrow. And you guys know I love to buy the dip, man. I'm like, one of my stocks go down. I'm like, psh. But this is like, I don't even know if I could buy the dip tomorrow because 7% revenue growth expected when analysts were expecting 19%, and I'm expecting you to do 15 to 20%. So let's say my midpoint's maybe 17.5. You're coming in less than half of my midpoint. Oh my gosh. Okay. That's just, nothing short of devastating from good old Meta here. That's awful, okay? Awful. Now, the first penny stock to fall was Netflix, okay? Netflix was the first penny stock of this bunch to fall. Basically, Netflix, if you didn't already know, that one fell like 25% in the day after earnings or something like that. Netflix at that time was a $200-something billion market cap. This one's trading like a penny stock, essentially. When you're getting these sorts of moves, you're trading like a penny stock, man. I mean, 52-week low on this one, it hit 350-something on that day. Incredible, right? Don't be surprised. Don't be shocked if this baby hits back down to those mid 300 levels. And the reason being is there's going to be so much pressure on the NASDAQ. Never mind we'll get into Amazon in just a minute, but if Amazon's not quite there between what's about to happen tomorrow and what could happen the next day, it's easy. Netflix could all of a sudden see something in the threes again. And, that was penny stock number one, okay? Second penny stock, PayPal. PayPal was treated like a penny stock today. 24.5% downward move for PayPal. Yeah, it's a penny stock move, man. These moves are nothing short of incredible for a company that has a 12-figure valuation on it. A 12-figure valuation on this company, and it trades like a penny stock. Nothing short of shocking. Look at the volume on this today. 134 million shares traded hands. Average volume of 16 million. People are just, in this market, and we'll get into that in a little bit, kind of what's going on here, but nonetheless, we are in the most volatile stage I've ever seen being in the market. I've never seen mega cap stocks be treated like penny stocks. I've never, ever seen that. This is new to me, okay? I can tell you that. This is new to me. I don't ever remember a time period where it was mega cap after mega cap after mega cap was basically being treated like a penny stock. When you start talking about 20, 30% moves in a day for these stock prices, you're the furthest thing from a normal market. Let's put it that way. And it's devastation on devastation. And when you get these sorts of moves, right? When you get PayPal and, Facebook and Netflix and all these massive market caps to go down like that, you want to talk about shaking up the market and getting everybody really, really freaked out, because people are looking at this and are like, oh my gosh, if this is going on with these mega caps, what's going to happen with my small cap stock? What's that going to be, 40%, 50%? That's what people start thinking. Everybody, when you're in a fear cycle, everybody starts thinking the worst, right? Everything just goes negative, 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 right? Everybody starts thinking the worst in the situation, and like, dude, if PayPal just fell 25%, my small cap, what's that, 100% down? Everything's going to $1 a share. That's the way people start thinking in this sort of market, and it's rough. Obviously, I'm just started buying PayPal, and I'm going to continue to buy the stock if it goes any lower. But right now, there's no telling where the bottom is with a lot of these stocks, and that's the scariest part for people, right? Kevin O'Leary today. Oh no, Kevin! Oh my gosh. Okay, so I don't know if you guys saw this today, but basically, he's a PayPal shareholder. He went down 25% or whatever on that stock. Then he goes in and flips the money into Meta, which just cut 25%. That's, oh man, people make the strangest decision in this sort of market where it's like, this stock's getting killed, so let me get out of that and try to pile it into this one, and then that stock gets killed as well. And it's like, oh gosh, Kevin O'Leary is not a traditional stock market investor. Let's just put it that way. He goes on CNBC because he's on Shark Tank and things like that. But these are the sorts of moves where it's like, PayPal today, their quarter was not a disaster at all. Facebook, I would say, was a disaster, okay? And that hurts me to say as a Facebook shareholder, but that quarter was a disaster. If PayPal's wasn't a disaster, PayPal got unjust, it was unjust the way PayPal got hit today. If anything, Kevin O'Leary should have been buying PayPal rather than selling out of that stock here today and flipping the money into Facebook. Oh my gosh. So now you just took a 25% cut, then you went into something else and got another 25% cut. That's rough on rough. Stay focused on the long term with these companies, guys. This flipping in and out and in and out of the market, in and out of the stocks from this it's like, dude, you see a stock that's at a great price, you buy the dang stock. And, this whole trying to play stuff in the short term is just ridiculous, okay? Now, that just is the tip of the iceberg, what we just shared there, okay? So, we're in a crazy confusing market, not just in terms of the moves these stock prices are making, but in terms of the fundamental underlying things that are going on with these companies. So I was on the UPS conference call last night, okay? And I was listening to that conference call, and basically in that conference call, they said the first week of January, we were like, where did all the customers go? Which is a scary statement. It's like, what the heck? UPS said that basically in the first, part of January, they're like, where did all the customers go? That's scary. But you know what else they said? They said, but then in the back half of the month, the business came back roaring, they said, and now they're feeling really, really good about their 2022 guidance. So that's a conflicting data point like we're getting in the market right now, where it's like, oh my gosh, okay, you're basically saying your business fell off the cliff in the front of January, but then it came back roaring. So then it's like, okay, well, what's going to happen now? Is it going to fall back off a cliff? Is it going to stay roaring? Is it going to be somewhere in between? And this is where you get these conflicting data points in this market that makes it so dang tough for, that's why these mega caps are trading like penny stocks right now, because I don't think fund managers or anybody has any clue what's really going to happen right now. People are like, are we in for a crash? Is this just a correction? Are these companies' earnings going to come back? Are they going to downtrend? People are so darn confused with what they're hearing. Here's the thing, guys. A lot of these CEOs of companies aren't even giving guidance right now, okay? A lot of them aren't giving guidance, or they're really, really lowballing guidance. They're not putting big numbers out there at all. Right now, CEOs of these companies and executives of these companies are max confused. They don't know what's going to happen in their business, to be honest. And that's why none of them will even provide guidance right now, because they're like, I don't know. It could be really bad. It could be good. And that's not normal, right? Usually at this time of year, companies have a pretty good forecast, right? There's certain time periods where maybe they're a little more uncertain than others, right? But at the end of the day, most of them can guide out for at least the next quarter or for the full year and say, here's where we think we're going to be. And for a lot of these companies, they're not even guiding numbers. They're like, right now, it's too uncertain. We're not going to put guidance out there right now. Or they're in a situation where they're trying to lowball their numbers because they're like, I don't really know. Let's put a low number out there so we can hopefully come in and beat that, because we don't really know what the heck's going to happen this year. And that causes the whole entire market to be in this state of limbo and max confusion on what's going on here. Are we in for a massive recession? Or are we not? Was this just kind of a short-term situation going on? And so CEOs are max confused. Executives are max confused. And when those folks are max confused, you know who else is going to be? Everybody that's participating in the market. And that's why You've seen so many people very recently flood to cash, right? Or flood out of the market or sell positions because a lot of people are just like, I don't know, man. I'm confused right now, right? As far as me, I'm raising cash right now, but not from a standpoint of selling stocks. What I'm doing to raise cash is taking some equity out of my main home and doing something where I've set up accounts just in case we get a market crash that I could margin on those accounts. I wouldn't suggest that for other people. That's something very, very dangerous. But I want to be in a position where I got plenty of money around just in case. Because I don't know. What if we do have a crash? What if we do have a major recession or something like that? I want to be prepared for that. I want to have something ready to rock and roll in case we get into that situation. If it doesn't happen, it doesn't happen. I'm fine with that, right? Because I've been buying these stocks very, very heavily recently, and I'm going to continue to buy them heavily. But if we do wind up into any recession or any, market crash where the market, crashes the worst we've seen in many years, and all of a sudden the index are down 30, 40%, at least I'll be ready for that, okay? But right now, people are really, really confused, and you've seen a flood of money really go to the sideline recently, right? Also, remember, this is something I didn't even pull up in this video, okay? Puts have gone insane. The amount of put option activity in the market, trading like $1 trillion plus a day in put options recently because people are freaked out, right? And so they're buying put options. They're like, oh man, maybe this market's going to continue to tank. Buy puts. And so that's the move that's going on right now. People are flooding to cash. They're buying put options. They're short in the market because people are uncertain right now or they're raising capital, right? So that's the type of market we're in right now. Now, the mega cap report card so far for the mega caps, right? Netflix, bad. Microsoft, solid numbers. Tesla, great numbers. Apple, great numbers. Google, solid numbers. PayPal, bad numbers. And Meta came in with the most disappointing earnings that I've seen from any mega cap in a while. That one was incredibly concerning. So right now we're in this state of the stock market where, you want to talk about a mixed bag, which is something they talk about in the stock market. These quarterly reports were a mixed bag because you had great numbers from Apple and Tesla. You had some solid numbers, and then you had a lot of bad numbers. And so people are like, okay, is it just Tesla and Apple just are doing great and everybody else is doing bad or just solid? Like, this is where you get that confusion in the market. But also do keep in mind, okay, Tesla has a big backlog of orders from basically last year that were put in from 2021 that they're going to have to sell through. So we still don't know if Tesla is selling so amazing because of that backlog or because those orders are still coming in strong here, throughout January into February, right? As far as Apple goes, Apple didn't really want to get into specific guidance. They said they're expecting growth, but they didn't, Tim Cook didn't go out there and say we're expecting ... number. So that's kind of a little worrisome. And a lot of these companies, the guidance was really weak or in a state of they didn't even really guide, right? And so we're in a situation here where, you're coming off of a couple mega caps that are bad. So now we're almost through all the mega caps reporting. This is the problem. Almost all the mega caps have reported. We got back-to-back bads now from the mega caps, and all eyes are on Amazon now, which is reporting earnings in less than 24 hours from now. This is maybe the biggest earnings I've ever seen from any public company ever in the market. Okay, this is beyond big. Because if you go from a situation where PayPal disappointed big time, Amazon disappointed big time, Facebook disappointed big time, Meta, and all of a sudden you get Amazon to disappoint big time, oh my gosh, guys, okay, that would be just devastating to this market in just one of those states of just, everybody kind of capitulating out of this market, right? Because here's the thing, this company's expected to have 15% growth next quarter. What does Amazon have to say about that? Are they feeling like 15% growth? If they come under that number, oh my gosh, by the way, look at, everybody's already freaked out of Amazon. This stock's down 3.6% after hours. And, they're reporting earnings tomorrow. Everybody's already getting freaked out of Amazon. And they're like, they're looking at what just happened to Meta after hours, 24%. And they're like, is that coming to Amazon? Let me just go ahead and maybe cash a little bit of shares here because I don't want to be down 24% on Amazon after hours tomorrow. So this is the biggest number. Last quarter doesn't even matter that much. No one's really looking at that. They want to know what's going to happen over this next quarter and what's going to happen over this year. Analysts expect Amazon to grow 17%. I think it's doable, but gosh, man, if Amazon doesn't give guidance or they're going to sandbag this thing, it's going to add more fuel to the fire of uncertainty and fear in this market right now. And then we got to wait 3 months for the next earnings period. That's a problem. And so you go into the situation where, okay, PayPal was bad, Facebook was bad, Amazon was bad. That's what everybody's going to remember from this earnings season. People remember what would happen most recently. So Amazon could save the whole market or could just end up in a situation where this market even gets rougher, let's put it that way, if they come in and disappoint. And that's what is that's the scariest part of their earnings. It's the biggest earnings I've ever seen from being in the market. I can just tell you that. Everybody's eyes are going to be glued to this one, okay? Now, Tom Lee went out there and said that we're going to have a violent rally in February, okay? And there was definitely a possibility if it wasn't for the fact, he said this a couple days ago, there was definitely a real possibility if the PayPal numbers didn't disappoint and if Facebook didn't just report a disaster of a quarter. There was a real possibility, but because those companies have disappointed so heavily, we're in the situation where, I don't want to say it's impossible, but now you're counting on Amazon. If Amazon doesn't come in with those strong numbers and they disappoint and that stock goes down, what do you have to go off of? Because then over the next few weeks, we have small caps reporting, okay? Which are a lot of those companies I own. No one cares about small caps. If Tattoo Chef reports good earnings and Honest reports good earnings and Oatly reports good earnings, no one cares. That doesn't matter, okay? That matters to me, but that doesn't matter to the market. So markets care about those mega caps we just looked at. And so if the mega caps are in a place of weakness, it's hard to get that type of violent rally if everybody's looking at it and they're like, these quarters are awful, these companies are reporting, and who's to say it doesn't get worse the next quarter? That's what everybody starts thinking, right? When you're in a fear cycle, everybody starts thinking the worst, the worst, the worst, the worst, the worst, right? So that's what makes that really tough. Oh boy, okay? Oh boy. Mr. Powell, are they going to have their hands full, okay? What we've seen from this earnings season is a mixed bag. And a mixed bag of earnings makes somebody like Powell say, where's the economy at? When Facebook, which is a company that gets most of their business from small companies, small businesses, and mid-sized businesses, that's who does a lot of, most of Facebook's business. When you see that happen, you got to think as Powell in this situation, like, are we going to go into a recession? And do you want to be the guy that people will pin the recession on, right? Because if he raises rates, especially multiple times, like they're talking about, 4 to 7 times all of a sudden everybody's talking about, right? Everybody's going to put the recession on him. Even if that's not true, people will put it on him. And does he really want to be that guy? And does Biden really want that? Does the current administration really want that, right? And so this is why I went out there and said basically, I think, I truly believe this, I would be extremely surprised if they raise rates any more than twice this year. Based upon the guidance we're hearing out of these companies and based upon how scared these companies are with even reporting guidance, I would be shocked if the Fed raises rates more than twice this year because of all the uncertainty. And I don't know if they really want to be seen as the ones that put the whole market under. Because here's the thing, okay? If you have economic activity weakening, prices are naturally going to end up coming down in that situation because companies start to get desperate. They start to sell items for cheaper because they're like, oh, we're not moving the volume we were. We need to move items. So they bring down price. That's like economics 101. That's business 101, right? If you can't move your products at full price, you bring down the price. And so that ends up taming inflation in itself. And so that's why I'm not even so convinced the Fed's going to need to raise more than maybe once or twice this year. And I think, to be honest, unless all these companies next quarter all of a sudden are saying, oh, business is great, guys, and they have great guidance, unless that's a scenario, Powell's not going to be able to raise. And that's the thing I think a lot of people aren't even factoring in this market right now, is they're looking at this and they're saying, well, we could end up in a double bad situation where the Fed's raising rates a bunch this year and economic activity just, plummets and these companies report bad earnings. Yeah, that would be ugly. I don't think the Fed is that dumb. Let's just put it that way. I don't think they're perfect by any stretch of the imagination. I think they've lagged on inflation the whole time. But with that being said, I don't think they're going to put us into a situation where they raise rates 6-7 times and, companies are reporting negative earnings or something like that, right? That would end up into a massive recession. I don't think they want that. No one wants that. People get voted out of office for that. And I don't think he wants to be the scapegoat of a recession, okay? But they got their hands full, man. They got their hands full there, okay? Yarndini, I haven't pulled up some Yarndini stuff in a while. Some good stuff here, okay? So mid-caps, this was as of the 28th. We're actually technically a little lower than that now. But as of the 28th, 14.3 on the mid-caps, which is unsustainably low. And there's something to keep in mind. We can't stay this low forever, okay? that, regardless of whatever happens short term with earnings and the Fed and all those sorts of things, you don't trade down here for significant amounts of time. And things will flip. And when things do flip, things could still be looking bad with underlying. Keep that in mind, because what happens is smalls and mids start to move first. Smalls specifically, which smalls are trading unsustainably low right now, which means essentially there's a ticking time bomb for those to get bought up. We just don't know when that is going to be. But it's a ticking time bomb until small caps end up getting bought up like left and right? But when you're in this sort of situation, you could see economic activity getting worse. You could see more fear in the market, and you could actually start to see small caps moving up in that sort of market, believe it or not. It's happened many times before, and it won't make any sense to people because they'll be looking at it. And this happened all the way back to when I was first investing, 2008, 2009. The market bottomed at around March of 2009, okay? And the first thing to start moving was a lot of the more risky stocks in the small caps. And people are like, what? Why are these stocks going up so much? They're going to have to go back down. It doesn't make any sense. There's still so much bad economic news and just stuff in general, right? And there you had small caps starting to move, or just more speculative stocks start to move 20, 30, 40, 50, 60, 70, 80, 90, 100% in a matter of weeks or months. And people are like, what's going on here? And then you slowly start to see the economic data get a little better and a little better. And the Fed was kind of backstopping things a little bit. And the next thing you know, you started having moves up. And I can tell you, if the economy gets rough, the Fed's going to be there to backstop things because they'll be forced to be there. Okay, that's all I'll say about that. They will be forced to be there. And so you're in this situation where it'll end up frying people's brains, and folks will say, and bears will say, and short sellers will say, this doesn't make any sense. They're going to have to go back down. Well, it also doesn't make any sense how those stocks are capitulating down to just insane levels, because this is not sustainable. As this was not sustainable last year, this is also not sustainable. And you can't have it both ways and say, oh no, that was unsustainable, but this isn't unstable. No, it doesn't work like that. Okay, where we should be trading is somewhere in here. And so what we know is this is unsustainable and this is unsustainable. You don't get these sort of time periods often, which is obviously why I'm deploying money out there in the small caps right now. Now, in terms of the large caps, as of tomorrow, based upon kind of what I see in the market and those sorts of things, I think we'll be trading somewhere in here, which is still in the higher range for large caps. Do keep that in mind. But also keep in mind there's been a flood of money out there like we've never seen. So a lot of high net worth individuals, funds, they got to put their money somewhere. So a lot of times they just see is put it in the large caps. Okay, so large caps should get more and more in line, and that's the good news, that they're getting more and more in line with at least where they should be, all right? Now, you ever seen the movie Friday? Okay, Debo, he's the neighborhood bully, and he's just bullying everybody around. That's hedge fund managers in huge money right now. They're the bullies, and they're gonna send these stocks wherever they want to send these stocks right now. Retail, we have really no power in this situation. We can't move a stock if our life depended on it right now in this sort of market. The hedge funds control everything right now, and if they want to send Facebook down 25% tomorrow, they'll send it down 25% tomorrow. And that's going to be that essentially. And in this sort of market, what you get is big money bullies, smaller money out, and they end up acquiring shares on the cheap, essentially, in these sorts of markets, where they'll bully out, the folks that are maybe highly leveraged in this market, or the funds that are highly leveraged and they get margin calls and they have to sell in these situations, right? And they get to pick up those shares. They'll bully out retail in this sort of situation, and they are the Debo. And that's why last year at this time, man, January, February last year, you had the whole retail movement, and everybody was laughing at the hedge funds, and we got all the power. And I was just scared. I was just scared hearing all that talk, because I know who's really running the show, and I know who's really the bullies in the end. And they'll take this market wherever they want to take it. If they want to take it down another 20% on the NASDAQ, they'll take it down 20%. They'll do whatever they want to do because they're the ones that end up controlling this market. And that's why I say never laugh at big money, right? Because just believe me, they got too much ammunition on their side to play games with them like that. They got way too much ammunition on their side to even try to play games. And that's why I hated the whole AMC GameStop movement, because I was looking at that and everybody was trying to fight the hedge funds. And I'm like, dude, you don't realize, the retail investors are North Korea, and this is the United States Army. There's different levels to this game. And, that's what's going to happen. As far as me, what I'm doing in this market, I'm keeping focused, keeping my head down. If I see stocks at great prices, I buy those dang stocks. And, I continue to do that. And that's what I'll continue to do. Wherever this market takes us into more of a correction, more of a crash, I keep my head down. I keep buying. I don't care what this person thinks or that person thinks or this person's selling or this person's buying. I don't care about all that. I just stay focused on what I'm doing out there, make the moves that I want to make, and let everything play out over the coming years. But we're in a volatile market, and Debo's running around pushing things around, and we'll continue to. It's a great time to take stock market investing very, very serious. If you've never taken stock market investing serious, these are the sorts of markets you got to do it. Okay, so if you're looking to take advantage of a great deal we're going to have for Valentine's Day for the private stock group, the Financial Fortress program, which will teach you everything basically you need to know about stock market investing, running portfolios. Check out pinned comment down there. Don't let markets like this scare you away from the market. These are the sorts of markets you got to get excited about and take very, very serious. Otherwise, you'll just look back in a few years and end up regretting it. Much love and have a great day.